Hey, what's going on, my good people? Happy New Year. This is the day the Lord has made. I will rejoice and be glad in it. Oh no, that's the church me. I'm not going to go all the way there. But thank you all for coming to join me. Let's talk real estate. This is my first broadcast. This is going to be a great show. I got a great guy that's going to be talking about some financing, some how he can help you, how he can assist you to getting your home. First time home buyer. We're going to get into as much as we can, but I just want to just thank you guys, those that are attending today's show. For those that don't know me, my name is Darian Cole. I am your trustworthy realtor. I love what I do. I love helping folks. I love doing the good work of being a realtor because me personally, I'm the type of guy that likes to get nitty and gritty with, doing deals and, trying to make the best decision as far as which way to go. So I'm just grateful that we can be able to be here and just, get into the real estate mindset. So without further ado, I'm going to introduce my guest. And let me tell you, this guy, really good guy. He treated me out to dinner. He ate about 8 pounds of fish. Okay. Now I don't know who does that. All right. I'm messing with him. But he's a good guy. Based off what I found out about him, he's been doing this for a very long time. He's licensed in multiple different states, dealing with mortgage lending, and we want to drill him with some questions today. So all of my guests, those that have anything that they want to ask or want to throw out there, please do so because we want to drill them with questions. We want to drill them with questions because this is what it's all about, being able to educate those that are in the mindset of looking for a home, wanted to purchase their first home, wanted to invest into getting a home, or whatever the case may be. So let's get into it. So without further ado, let's see if I get there. He is. What's going on, my brother?
All is well, man. Thank God. How about you, Darian?
Man, another day, another dollar. That's how we work here, ain't
Yep.
it? Man, I totally appreciate you being able to just participate in my first and definitely not my last broadcast. Thank you, brother. Thank you. So you
Of
want to
course. I'm
introduce
glad to
yourself?
be here, and I really appreciate the opportunity, Darian.
Oh, hey, I appreciate it. You want to go ahead and introduce yourself, so because I don't want to mess up your name. I'm good at that.
Sure, absolutely. Good evening, and thanks for having me on again, Darren. My name is David Toaff. I'm a senior loan officer with First Home Mortgage Corporation. We're actually the number one purchase loan lender in the state of Maryland, but we do business in D.C., Maryland, Virginia, Florida, and beyond, really all over the East Coast. And I would love to answer any questions, difficult questions, if they're more private. Darren or I, of course, could set up a meeting, a more private meeting if that's most appropriate. But whether it's down payment assistance, credit repair, renovation loans, jumbo loans, whatever anyone wants to speak about, I'm all ears, and I'd love to give the best feedback I can.
Awesome. Now I'm gonna be your first customer.
Perfect. Right.
Just to make sure I get to be able to ask all the questions I can ask coming from a non-realtor standpoint. You know what I mean? But so just so the people can get comfortable with you, tell us something personal about yourself. How long have you been doing this, and why'd you get into business?
So I've been doing this for almost 9 years. It will be 9 years in May. And I had done various jobs where I just didn't really feel like I was getting paid what I should have been getting paid. I used to, believe it or not, breakdance on the streets of Philly where I grew up. That was a job of mine, but believe me, you don't make a whole lot of money doing that. You
I might
break
have
your
to get
back.
you to do that one
My
day.
back
Huh?
kind of still hurts a little bit from that. I'm still doing a little breakdancing, but it's more on the carpet, for old men. It's old man style like this now. Now, I also sold electronics. I was doing customer service, editing the website, determining prices. I felt like I was doing everything, and I could barely pay my rent. So I went to school, and when I came out of school, I wanted to go into an industry that involved finances, and financial instruments always intrigued me. But again, I was always kind of making very small amounts of money for business owners, and I kind of wanted to do my own thing. So, I interviewed for this company. The management was very humble, very honest. It was really attractive, and I, jumped on board, and that's been that. I've been with this company my entire career.
Well, I gotta get you to break dance one day. I might.
You might laugh, but hey, laughing's good for you. It's not what it used to be, man, but we'll do a little something on
But
the
I
next
mean, hey, look,
element.
I don't know too much. I know how to praise break. That's the best I could go. But but yeah, but look, let's just get into it, man.
Right.
I got a tons of just natural questions that comes to my mind, and those that's watching, we got a couple that's watching right now. Shout out to everybody. But I just want to get into it and try to pick your brain about this process. And one thing that I did want to talk about, because like everybody know I always like to have a topic of what we're going to be talking about. I want to based off of the topic that I brought up, what exactly does a mortgage lender do? Because I mean, I know what the educational term says, but from your own mouth, how can we make it clear about what exactly that you do, to make sure that people understand your position fully?
Sure. And it is a lot more than what you would think. So I think it's a great question. I initially consult with people, typically with a phone call, sometimes a Zoom call. In person, just not as common these days with the viruses and all. But we explain what it appears like a person can qualify for, what kind of incentives they might be eligible for, what are ideal next steps for them. Kind of discuss things, explain the process first, answer questions they have, make them feel like they know a little about who they're talking to, a bit about the company and so on. And then the next step after that is typically pre-approving people. That's a free, non-binding process. A lot of people are worried about it, but it doesn't cost you anything at all. And it can help. Even if you're not truly ready, you need to work on your credit, you need to pay off some debts. It will give us an analysis of the either what you qualify for now or what steps A, B, and C are to get you to where you need to be. So that's a big chunk of what I would say we do.
Okay. Well, that's nice, because now I want to actually know what's all right, because I've heard many different answers, and I've always gotten confused based off of what was said. So I want to talk to you about it. What's the difference, I guess you should say, between being pre-qualified and pre-approved? Is there a huge difference, or is there like the similarities with just like because of this one thing,
Mhm.
you know?
Yeah,
what's the difference?
there definitely is a substantial difference. A pre-qualification can be anything from just a verbal explanation of one's finances, and then someone like myself maybe writing a letter saying based upon the information you provided, it appears like you qualify for this. Or some of these bigger banks, they won't necessarily even do real pre-approvals, so you could fill out a form online and really have very little processing of that file done, and they might spit out a letter and say you qualify for 350, but you may very well find out later that that's not in fact the case. We'll get phone calls from people, sometimes literally in tears, like, I just found out I can't qualify, I'm 2 weeks from closing, is there anything you can do? um, that's why it's so important to do the pre-approval, which I'll touch on right away. That's where there's an application done, online, over the phone, or sometimes in person.
Okay.
And then we're verifying W-2s, pay stubs, bank statements. We're verifying employment. We're running something called an automated underwriting system. We're really letting you know precisely what you can do, guaranteed. Now, obviously, there needs to be an appraisal. We need to make sure the home's in decent shape, and so on and so forth. But subject to ensuring that the title is in your name, there's no issues with the title, etc. The homeowner's insurance is set up. We can really assure you that, assuming your employment is still in place and the funds are still there, that this loan is going to close. So
Okay.
the pre-approval carries way more weight.
Oh wow. Okay. Well, now you cleared up my mind about that, because I done heard, you know how you got everybody that's the expert, man. So
Yep.
you gotta bob and weave through some of the nonsense that you hear. Because I know that because when I was doing my my list of who to deal with as far as business, and I think I told you this before. Like, man, I'm like, all right, some of these guys I'm talking to, I know more than they do.
Yeah.
That should never be the case.
Some people focus on the sales side of things and they don't actually read up on anything. That could be a little bit of a problem. So
Man, I had to do some reading and some soul searching to make sure I can find out for myself what exactly is the answer. But some of the folks that I've heard is like it's crazy. It's like no way that that should be it. You know what I mean? So I'm glad that we was able to get that out the way. Oh, okay, hold on. Somebody shooting the gun early. We got a question for you.
all right, fantastic.
we can I enjoy my guest first? I'm just kidding. So the question is, as a client, when purchasing a home, do student loans have a big impact on qualifying for a mortgage loan? So I put it up there for people to see.
And that's a fantastic question. I appreciate you asking, Courtney. It really depends is the answer. So if they're in deferment, as so many people's are these days, we would have to count whether it's FHA, conventional, either one of those. We would have to count 0.5% of them. So say that you have $100,000 student loan, we need to count $500 in your debt to income ratio, which would be all the minimum payments that you have to make divided by your income, which basically helps lenders understand how much you can qualify for. Depending on what loan program, that number can sometimes be as high as like 55, 57%. But of course, 0.5% of your student loans could potentially really be a hindrance. In that case, if it's going to be a problem, if a person can put it into income-based repayment, a lot of times that number is a whole lot lower than 0.5%. I've seen it as low as 50, $60. Sometimes it's more like 200, 300, but that can be a potential solution to let someone qualify for more, when they have student loans.
Mm, mm. I got some heavy stuff. I'm waiting for Joe Biden to do something with him, but
You and I both, man, we're waiting
but
impatiently.
so how often, like, just following up with that question, how often do you get college kids that's coming straight off of a student loan, to actually look or pursue to get into their own home themselves? Because I know, a lot of college kids, they go back to their mom and dad's, or they look for an apartment that's close to the school. But there are a good sum of folks that do look to purchase a home, as soon as they graduate, or either while they're in school, or I have some friends that may want to invest, while they're in school, and make money from a property of his own. So what advice would you say for that, for those that may be going in that direction, or just wanted to purchase their first home when they come out?
you know, I bought my first home when I was 30, and had I taken advantage and figured out how to buy one when I was 22, or whatnot, I mean, God only knows how much appreciation I could have enjoyed in that period of time. I'm glad I bought one. I bought. I'm grateful I did, but boy, I wish I had thought about these things earlier. Um, you know, of course, affordability, as in the Washington metropolitan area, just like a lot of areas, can be problematic. But I've had everything from two students buying a home together, a student figuring out how to buy a home, some two-bedroom home where we can rent out one of the rooms, and then of course some people have a co-signer on there. Which if you have someone who can help you with that, as long as you can make sure that you can handle that note, or whoever is going to maybe, reside with you can help
Mhm.
you to handle that note. It does make sense to get into something sooner rather than later, as a general rule of thumb. So I would say I have a fair amount of people, even 22, 23 years old. I've had one client once, 21 years old, buy. I wasn't smart enough to do that. But speaking of which, there's a tremendous amount of incentives that people should be aware of. I mean, right now in Montgomery County, you can get up to $25,000 as a forgivable loan towards a first home purchase. People who reside in Washington, D.C. for at least 3 years, they're able to get up to $84,000 towards their purchase. And that's just touching on things. There's additional benefits on top of that. So depending on where you live, it's really worth talking to a local loan officer. A lot of times people just think to go to their bank. Banks don't specialize in mortgages. They're not necessarily going to know about all types of incentives, tax abatements, tax credits, etc. So, I think since there's no cost or obligation anyway to researching or even trying to get pre-approved, I think it's worth, seeing what you can do.
Okay. All right. You just kind of like spread up my mind about a couple things, and I'm trying to figure out what to ask you next, because you said a little something here and something there that was a little like a sweet tooth for me. but, but I'm gonna try to stick to my basic questions. But I'm gonna come back to that. All right.
Sure.
You talked about mortgages and how banks don't really know what's really best for you. We all know banks do what's best for them. That's just point blank, period. But what other options do people have besides the I guess you could say conventional mortgages or conventional loans? Because I know like there's the 30-year fixed rate, the 15-year, you have the adjustable rate, the FHA, VA, you got, I think, jumbo mortgages, interest only mortgages. So what route, I guess I could say, do you suggest someone to go? I gotta know everything is really based off of that person, but based off of your experience, what route do you see that is better, that you would probably help someone go towards, or less risky, I guess you could say, that people should look into?
I mean, by all means, it's really important to shop within your budget, and
Mm-hmm.
not just what a lender can
So
qualify you.
I can't get the $1 million house, is what you're saying?
Maybe next year, man. We're almost there. Come on, just breathe easy for a minute.
I mean, it's new year, new me. That's
You'll do it. We'll all do it. But you see, it is very personal. I would definitely agree with that. But I would say there's oftentimes a solution. And a lot, like I was saying, a lot of lenders, they just want to put you in that one easy product, and if you don't fit their mold, you know, they're on to the next one. So I like to give actual examples. I have a client right now. She's a single mother, has two children. She's a librarian. Obviously doesn't make a ton of money. Wanted to be in a property that has a little backyard for her children to be able to play in, and wanted to be in an area that she felt, fairly comfortable in. The problem was, areas she was looking in, even in the most affordable parts of DC, if you are trying to spend, 350, 400K, and you don't want a condo, as a lot of people don't, it's very slim pickings. So she qualifies for assistance because she's a DC government employee, additional assistance for being a DC government resident. She's going to have no property taxes for 5 years because she's within a certain income limit. Excuse me. But we still were left with one issue. The kitchen was just kind of awkward. It was one of these older houses. She really didn't feel like there was going to be enough room in there. One of the ways she lives her life is by eating out very little and doing most of the cooking at home, which I think is wise for any of us to do. So we're doing a renovation loan. On top of all that assistance, she's doing an FHA limited 203K. She got numerous contractor referrals. She found a really reasonably priced contractor. People don't think that they're out there, but some contractors are very reasonable, and we're having the kitchen changed over. All of this process is going to be done. And at the end of it, she's really paying a note that's going to end up being about $1,800. She's very comfortable with the payment, and she's getting the work done to the home that she needs. The program she's using, the home purchase assistance program in DC, actually requires the seller to fix, any kind of safety issues. If you have chipped and peeling paint, if there's, steps without a railing, they'll require all that to be fixed. So she really did not think that she was going to get what she wanted, a little house on a little hill, but it's all working out. So I can't say that there's a one size fits all, but it's important to understand there's down payment assistance, there's renovation products to help you when you have the perfect property, but it needs a little bit of work. For veterans, zero down with very limited fees, no mortgage insurance. Yeah, and there's grants out there as well. It's really, I would say in general, research and really educate yourself on what's out there, and possibly who you might be able to buy with if you can't afford to on your own. I would like to say that as well. I've had brothers, sisters, etc., going on something together.
Man, you got a lot of information. I'm trying to settle myself. My girl told me, relax, don't get too excited. I'm trying to get not to get too excited because when I start hearing stuff, I want to make sure that I could be able to use it for myself too. Because I think you and I had this conversation. My grandparents trying to get involved with doing this stuff too. So I don't just ask questions for just anybody else. I really ask for myself too. Because I want to be able. I think the best way to go in something is to actually know for yourself, to know what's out there. So you definitely got that spot on. So we got some questions for you.
All
They in the
right,
way of my questions, but we'll get to my questions later.
let's do it.
So let me put this up. Oh, this is a special question from a special lady. So Amari Grant, she said, or she's asking, when looking at someone's income, are you looking for just continuously employment, or is there a specific amount of years people should be working prior to pre-approval? That's a good question.
That is a good question, and as always, there's kind of a multifaceted answer. If you have a salaried position, as long as they're paying you the same amount, we can use that immediately. So you could even have a final offer letter and have it not even started the job and gotten pre-approved. If a person's self-employed, so they're working for someone else, they're getting a 1099. Most of the time, you need a 2-year history, sometimes 1 year if it's a similar line of work that they were doing when they were getting a W-2. And then, if you have like an hourly position, you typically need at least 6 months, except if some supervisor, manager, or whatnot is willing to write a letter saying that they guarantee you a certain amount of hours or you're scheduled to work 40 hours a week. We could sometimes kind of use that almost as if it's a salary. But, if a person had a job gap, was in school or whatever it is, often with just an explanation or whatnot, we can still move forward. So yeah, you don't necessarily need to have a long length. They like to see 2 years, but education can count for part of that. And if you did have, you were out of work for any reason at some point, then we can go back further to try to add to that 2-year history.
Okay. Cool. You got some questions here. It's rolling there. Oh, I got my brother Kevin Marley on. Let me see if I can. He got his construction company. He's talking about use him. If y'all need some construction done,
Okay.
he could be the man to step in. That's his number right there.
Happy to hit them up. No problem.
I got good brothers on here, man. This is how we do.
All about networking, right?
All about network. Yeah, give him a call. He's a good dude right there. We got another. Kevin asked a question too. He said, "What about?" Let me put him up there. He says, "What about the BRR?" You see it for yourself.
You know what? I'm gonna
A
have to
lot of
pull out.
R's right there.
I'm gonna have to pull out Google and figure out what that is real quick, and then we can hopefully answer it. Because you know what? I would like to say I know everything, but clearly I don't. So buy rehab. Okay. So buy rehab, rent, refinance, repeat. I
Oh, it's
mean,
all those R's. Okay.
that's what all that's about. He was not kidding about ours. Those are real things. So um, you know, I definitely think a person like yourself who has experience in the construction world, that would be more apt, to be able to do that. You certainly can do so regardless. With all types of renovation products, they have renovation loans for primary residence, second homes, investment properties. But in terms of just being able to do it, as soon as you have, say you move into one property and you want to buy another, you can get a 12-month lease and we can immediately use 75% of the rental income right off the bat after leaving that. So that's one of the ways that people are able to do that. I can't say that I'm an expert on that specific method just because that's the first time I've read that terminology. But in general, I mean, people do it, and it definitely can be done. I just think it's just about not moving too quickly. I think some people end up in situations where their capital's tied up too fast. So you just want to kind of make sure you're not going above your budget. But I mean, by all means, my father tells me about a guy that he grew up with that, came from just extremely modest background, family suffered a lot. And, he ended up developing this, that, and the other. And let's just say he spends most of his life on planes these days. So, the man was able to buy several apartment buildings. And hey, that's what it starts with is, one home onto the next, into the next. So by all means, another thing about that is that with investment properties, you know, everything is tax deductible. I wish that they taught this stuff in school, but from the home's natural, depreciation, whether it's really going down in value or not is questionable, but you can write that off. Taxes, insurance, repairs, all of that. Any HOA fees, condo fees, all those things can be written off. So, even if you have $2,000 of rental income and the mortgage is 1,800, that might not sound that great. By the time you write off all those things, you could be paying very little taxes on that income. So
see, that's the thing. They don't want you to know that.
no, no.
I'm learning that. I'm learning that very, very much about that tax information, because I found out you get a big break doing a lot of things in real estate as far as taxes. And I'm especially in DC. I don't know what it is about DC, but DC is like, you get a lot of love when it comes to taxes in DC.
It's tremendous. People really, really need to understand that. Maryland and Virginia has some nice programs too, but nothing compares to the amount of assistance that's available in DC. This is really a city that has, more than people probably realize, dedicated themselves to affordable housing. There is no perfect situation. There's plenty of folks that should be in a home, deserve to be in a home, that are not in a home, and unfortunately might not be. But with that said, I don't believe there's anywhere else in the country that's going to give as much assistance. And it's just, I wish more people would really explore that. And it reminded me of one thing I should have said earlier, which is planning. Planning is everything. A lot of these programs, they can take 6-8 months to get approved for. It might take you some time to get your credit fixed. It might take you a little bit of time to get your, the proper job to qualify for what you want. But the more you plan ahead, the more you educate yourself before you actually want to look at properties, the better off you are. So
let me ask you this: is credit a huge factor?
Yes and no. What I mean by that is, a lot of people just think the higher my credit score is, the more home I'm going to get. It's not that simple. I would say it's a huge factor up on once you get to that 640 mark, you are eligible for all kinds of programs that can be extremely beneficial.
Okay.
When you're below that, you can still get a mortgage, but the terms don't look great. You certainly are not looking at a whole lot of down payment assistance. You can get down payment assistance with one program that at 620 is called Chenoa, but the terms are going to be worse. I really try to get my clients to that 640 score. And it's really important to understand that it can be done. My dad told me many times growing up, the squeaky wheel gets the oil. If you have a late payment with a credit card, you need to start mailing them, calling them, doing what it takes. I'm a loyal customer. This has stopped me from my, journey of buying a home. Rates are going up. You got to stay on people, or work with a third party that can help you with that if you don't have the time or patience for that. But there are absolutely ways to get people's credit scores up. I really feel it's super important to know that a lot of people have bad experiences with certain credit repair companies. A lot of the bigger ones out there, they really rip people off. So it leaves a bad taste in their mouth. But I do actually have credit repair contacts that have helped clients of mine go from, scores even in the low fives to that mark, that mid sixes mark, and get into properties. So it certainly matters, but there are absolutely ways to resolve things. One last thing about credit I need to say is that it is not the Bible. There are errors in your credit report very oftentimes. I went over one with a police officer client earlier, right? And she was shocked. She had no idea that there was this one of the late payments on there. It shouldn't have even been on there. It was an absolute error, right? But because she called me early enough, now we're working on getting everything situated ahead of time. So, you got to review your credit report in advance and fight to get those things off and figure out how. There's absolutely a way to get it done.
So in other words, the client has to be responsible and do what they got to do to get stuff done, right?
Absolutely. I mean,
okay, because you get. I'm saying it for those, because a lot of people think, all right, I give you my stuff, that you work, you do what you got to do. That's not always the case, and that's not never the case, because many folks that I've had meetings with, they expect you to do everything. Don't do nothing else. They don't want to. They just say, hey, here's my stuff. Get the work done. Get back to me when you're ready.
Right, right. And if your credit and finances and everything is all good to go, then it can kind of be that simple aside
Yeah.
from choosing the right property and all. But if you do need to work on your credit, yes, even if you're working with a great credit repair company, you do need to give them back some documentation that you get mailed. Yeah, you do really have to be involved.
And don't be late with it. Don't be, oh, I'll send it when I send it. Don't, I got to go down the line with some folks.
Yes. Yep.
But cool,
Because
cool,
you really
cool.
don't know when the right home is going to come up, when the right opportunities are going to
And
arise.
they leaving like that. They just, as soon as you like something, it's gone.
It's gone. Yes.
All
Yep.
right, we got another question for you. Got another question. Yeah, keep
Mhm.
on drilling him. Keep on drilling him. He ain't scared. He ain't scared. So now, all right, we got another one from Amari. All right, is there a formula to estimate buying power? I'm gonna stop it right there. Now I ask
2x.
the second one.
Okay. And 2x income is there's too many other factors, the down payment, the credit score, etc. What you can to estimate it though, there is a formula though. If you take the minimum payments on any debts that you have, so you don't have to worry about car insurance or rent, but really just anything that was shown on a credit report, credit card, student loan, car note, personal loans, just the minimum required payments on those divided by your monthly income. Now it's the net income that lenders have to calculate a certain way. If you're self-employed, if you're W-2, it might just be your salary or average hourly earnings over the year, whatnot. We could of course speak to exactly how to calculate that. But once you add the mortgage payment to those debts, the proposed mortgage, that number typically has to be 57% or lower. Now, 57% of your income obviously can be way out of affordability's range. I would really only recommend that if you're going to have someone else helping you with the mortgage, a tenant or whatever. But FHA loans, VA loans for veterans typically lets you go to about 57%. Conventional is going to be closer to about 46, 47% in terms of that formula. And I
Okay.
could just, write that out here just so that, that's spelled out as well.
Okay. Or they could call you too.
That works as well. Anytime.
Cool. Cool. All right. We got another one for you. Would you suggest? This is from Kevin. Would you suggest a hard lender or bank when purchasing?
So hard money lenders typically is just are what investors are using, so that they can close in 7 days, and it's kind of almost used as cash. The issue with hard money loans is that you could be looking at 7-10% interest rates, sometimes even higher, with pretty heavy costs up front. Unless you're an experienced home flipper developer, I wouldn't necessarily go with that. And believe it or not, I wouldn't necessarily recommend a bank either. Although you could technically call the company I work for a bank, we're really what's called a local lender or a correspondent lender. And I'll just briefly explain what does that really mean. Traditional banks, your Wells Fargo, Bank of America, etc. You could literally call me at midnight tonight. I'll work on your application. I'm not exaggerating earlier. My girlfriend understands that, this is my second girlfriend right here, and it is what it is. But you
It's
know,
good for you, sir. Good for you. 'Cause I
for now she understands. We'll see how long that goes once I have a job, but we'll see about that. For now, we can do that. But um, you can't necessarily reach them. They do car notes, they do financial planning, they do all kinds of other investments. So they're not focused just on mortgages. They're not necessarily going to be able to speak to all these programs or incentives, and they might not participate in them as well. The process is also not necessarily going to be all local. Everyone with the company that I work for who's working on your loan, they're either in DC or not too far out in Maryland. We're all local, in touch with each other. We can close fast. We can close loans in as fast as 2 weeks. So there's lots of benefits because we can access all those products of those banks, but we can actually process, underwrite your loan all locally. You can get in touch with us. It's a much more feeling like, okay, I know who I'm dealing with. And then lastly, you have brokers. Brokers are not as common because they don't have as much control of the process as we do. So brokers are really just kind of a middleman between a lender and the individual. They might shop and find you a good deal, but they can't necessarily control the appraisal, etc. So I'm with First Home Mortgage. I'm not saying we're the only good lending institution, but we're definitely one of them around here. And again, the reason, as I was saying, all we're doing 7 days a week is focusing on mortgaging, learning guidelines, researching benefits, etc. And because we're local, we're also extremely familiar with taxes in PG County, taxes in Howard County, incentives in Northern Virginia, etc. So we're really going to have a feel for the area. We're going to be able to speak to different neighborhoods, appreciation, etc. Banks that are doing refis in 50 states. How are they going to be an expert on the DC market? It's just not really going to be possible.
Okay. So you talked about something that I wanted to go back to because I had to, nitpick some stuff. You talked about, and it's actually on the flyer too, the DC programs that's out there. Let's talk about first-time home buyers. Okay, let's kind of look at them for a minute because I know I've had previous conversations before we had this broadcast, and I told them, hey, perfect, get on here, look and ask your questions.
Sure.
But for them, just in case you're not on, what advice do you have for first-time home buyers that's let's say that's in DC, starting out in DC? Because I know you said every state has something different. Okay, we're working within the DMV area, but let's start off in DC for those that's looking to purchase their home first time in DC. What advice do you have for them as far as how to begin that process after they call you?
Sure. And once we had that conversation, and understand what programs make sense, let's just say if it's like a lot of first time home buyers, you might not have the funds available. Homes are obviously pricey around here. So I would get in touch with a community based organization. I can send anyone a list of those. There's about 8 of them throughout the city. And you can do these online courses. Again, it's all about doing things sooner rather than later because it can take a few months to get approved for this. But I would basically find out what kind of incentives am I eligible for. It may be hard to believe, but I literally have clients who buy homes and they don't pay anything out of pocket. When I say nothing, I mean absolutely nothing. I have someone right now and her cash to close says like 0.07, because she is qualified for DC tax abatement. That means that not only is she not going to pay the tax to DC, which is normally the highest of the closing costs, the seller's tax comes back to her. So her purchase price is in the mid fours. She's getting almost 10 grand back from that. That's already most of the closing costs. The home purchase assistance program is giving her another $4,000 credit. There goes the rest of them. So it's just about getting signed up for these programs sooner rather than later. Right now, interest rates are in the low threes. That's still pretty good, but they're going up.
It's creeping back up. I haven't seen it.
They are. They're really they are creeping back up. And home prices. If you want a condo's a different story. That market has cooled off a little bit. You might be able to negotiate for seller credit, maybe to get the price down a little bit. But if you don't want a condo, it's still pretty competitive. And I don't see prices going down all that much anytime soon. Not in this city with such limited inventory and so much demand. So like I was saying, it's getting situated in those programs, talking to your realtor, speaking to Darian, exploring neighborhoods, going in the evening, seeing that you feel comfortable there, really feeling out the city ahead of time, doing your research. But even when you start with that first conversation, even before you get approved for all those funds, we can already get a feel for about what you will qualify for based upon the conversation. So you can get set up on a search, start even just looking at homes. I know you could set them up on an auto search there and, have them just kind of feel out, well, what's really out there in my budget, to help plan properly. I jumped into buying a condo very early on. But I was in a rush and I really did not explore my options. Like had I done it more, I probably would have figured out, a townhouse that could have worked for me. So that's some of the things that come to mind, really just getting acquainted with what programs, and if there are programs out there that might benefit you, although some zero down programs you can get pre-approved for tonight, the ones that give you the most assistance, particularly if you have like more moderate income, take a little while to get approved for. Thank God we have these blessings available. But it's all about getting situated sooner rather than later.
Okay. Cool. Yeah. Man, you all right? You good?
Definitely.
I don't want to hurt you on the. We just the first broadcast now. We'll make you good. Give some water.
We're ready to go. All ready to go.
Cool. Well, I got another question.
Fantastic.
Now and this is me asking, because obviously we as realtors we supposed to know certain things, and it's good to know certain things, and I want to make sure that all the questions that I get, I know somewhat the nature of it and how to answer it until before I come to you or whoever I'm dealing with. But there's a lot of talk about interest locks, and folks that I've talked to recently wanted to know about the interest locks and things in that sort. And can you one explain what that is so people can be educated about that? And for two, when does a person uh become or be in the interest lock rate or however you say it? And do you pretty much charge for the interest rate lock?
Yeah, it's a fantastic question, and definitely relevant to these times. If you want to be guaranteed a rate, right now, and you don't have a contract, you're not under contract to buy a property, or at least verbally, agreed upon to buy some property, you would need to pay an upfront non-refundable fee, which is why most people don't do that. Now, if we were seeing that rates were just starting to skyrocket and you were ready to buy a home, you're pre-approved, that's when I might consider, paying that cost. Although rates are going up, they're not going up, exponentially at this time. And my point is that to hopefully avoid that upfront fee, I would just try to lock in, you know, until further notice while we're on this general upward trajectory for rates as soon as you can, which really is as soon as, as soon as you tell me, hey, this, our client Mike's about to, go under contract. The seller verbally agreed, to 460. We're closing in 3 weeks. Okay, that's good enough for me. What's the address? I'll lock it in. Now you can on any, if it's not before you have a contract, there's no lock-in fee, at least not with the programs that we have. Now there is something called floating, where you're not locking in right away. You actually can wait to see where rates go up to about 10 days before your settlement. Um, that is a pretty risky venture right now. There's been periods, but there was a debt crisis in Europe a few years ago, and it was causing rates to just go down and down and down. I mean, what's the rush to lock then, right? But
Mhm.
when we're in a general, upward trajectory, I would try to lock as soon as possible.
Cool, cool.
Yeah,
See, that's why I ask these questions so I know for myself how to answer. Because you gonna be my teacher.
why not, man?
Oh, we got a
I
comment
got a
from
lot of teachers
somebody.
myself.
We got a comment from somebody. Oh, Monica Finner. It's a great chat and very informative and knowledgeable broadcast about purchasing a home.
Glad to hear that. Of course, happy to talk with anyone who's interested in chatting about any of this. I keep it pretty pressure free, also.
Yeah, well, we try to be, very informative and and knowledgeable at all times, as being the mindset of the broadcast, because there's a lot of folks out there that are scared to ask questions. They don't really want to, sound dumb, because that's type of stuff I hear. So we want to make sure that we can help them as much as possible. So that's pretty much where we at. That's good. All
And
right.
I really don't believe in this whole dumb question that, I didn't know anything about mortgage. I got a, college degree, economics. I did pretty good. I didn't know anything about mortgages. Honestly, God, until I got into this game. So I don't feel that I truly don't believe there's such a thing as dumb questions. And man, I drove my managers crazy my first few years. I didn't leave them alone. You think this is questions? I mean, I feel bad for them. So it's time for me to pay it forward, and I'm all, go ahead.
Well, we gonna keep it going. We got some more time. Okay. What is the meaning of refinance, and when is it a proper time to use this word?
Okay, sure. So, refinancing is where you're having the lender actually order a payoff of your current mortgage. You already have a home, you own it, and you either are getting rid of the old loan and setting up a new one in order to lower your interest rate. Now, that could be maybe taking your 30-year loan, and maybe you earn more money now, but you're going to be retiring in 15 years. So you want to change it to a 15-year fixed, which would be a very low rate but a higher payment. Most people are more concerned just about getting their payment down. So they might switch from a 30-year fix. Maybe they locked in at 4.5. Maybe rates are 3.25 now. So they want to pay off that loan and get a new one. Or lastly, and this is one of the reasons why it can be so incredibly beneficial to buy a home. People who buy in up and coming areas, and see a lot of appreciation, they will often then turn around. Their property value's gone up so much, sometimes in as little as 3, 4 years, that they suddenly have 100, 200 grand of equity in their property. You can actually pay off your loan, create a new, bigger loan, not necessarily with a higher payment. It all depends on where the rates are, right? But you can, and then actually get cash back. That's a cash out refinance, which is the other major reason people do it. Anything from paying off student loans, paying off credit cards, which is more popular, or just for home renovations, to buy your next home, etc. So a lot of people tap into the equity in their property.
So that's good. That's a nice term if you want to invest in another property, correct?
Absolutely. Yep. You'll see people do that a lot. And then you'll also just, people end up in hard times, especially after this virus. A lot of people were in rough financial shape. Then you get back on your feet, but you might be paying 20, 30% on your credit cards, and you could possibly pay those off, end up with a new mortgage. You might not need so much cash out, but want to be able to just manage your debts, lower your monthly expenses. So yeah, that's another big reason why people do it.
Mm. That's interesting. So you had mentioned something about those that retire, correct?
Mhm.
So I have a question. For those that have retired or going to retire in the next, couple years or whatever, so they can know, their steps of what to look forward to. And they say, hey, I live in this nice home, I don't have any heavy income coming in, but I would like to invest into something so I can truly live a more grand life or feel more comfortable about my finances. What route would you suggest for them to go into concerning their mindset of how they will want to reinvest, I guess, their funding, or if they want to look at other locations to possibly move or maybe even downsize, what route would you suggest for them?
I would say that again, starting with that pre-approval or at least a pre-qualification. So based upon whatever retirement income they have, figuring out how much they could qualify for. And I would just run different scenarios. Okay, let's see if you sell it. How this is about how much you're going to net. So maybe you can get this new home with all cash or just with a small mortgage. Sometimes it's worth looking at. Hey, how much can you rent this out for? Can we rent this out for enough money to where that plus your rental income could allow for you to buy a home that you really want to be in? So I would basically check all options to kind of see what makes sense for them.
Okay. So you were going on the rent side, which is not a bad idea, especially now where people are renting like crazy because places cost too much. And you know, I have a friend. He rents out his home. Sort of. He lives in there, and then he rents out, I guess, a unit there.
Okay.
And but he's not doing market rent, but he's getting a nice little paycheck coming in,
Sure.
where he plans on retiring soon. So that, I guess, that leads up to what he wants when he retires. And then I guess whatever happens after that, he'll probably go to market rent or whatever. He'll use that to put into something else that he will want to sit down and let it grow on. So I definitely agree with that as far as that mindset of how to actually move in that direction. But there's something else I wanted to ask as we get closer to our time. Why do people buy points? I
Yeah.
want to. I mean, this, like I said, this is something I'm learning for myself too. I know other people who have similar questions. I want to make sure I ask all the dumb questions for them.
Yeah. And you know what? I'm going to give an answer that might, that I sure hope it doesn't offend anyone, but it's so important for me to speak just the truth about anything. And points are a cost that should be there to lock a below market rate. That's what points are. So anyone can theoretically get a whole range of rates, maybe from like 2.5 to like 4 or whatnot, right? And at those above market rates, we can give you money back. So if you don't have enough money for the closing costs, maybe we give you a slightly higher rate and cut you a check at closing. Likewise, let's just say it's super important to have the lowest monthly payment. You might pay 3, 4, 5,000, however much upfront, sometimes less than that, to get a below market rate. Now, those points are tax deductible as well. However, a lot of lenders are predatory and people don't even know it. So there's a lot of institutions out there, and including ones that people really, really trust. And I'm just going to say them because people need to
Hey,
know.
this
Navy
this this
Federal,
is the
USAA,
broadcast right here. Let's go.
Veterans United. People think because the person at their banker's smiling at them, or they might have a cheap car note or a nice little savings account with no fees. So all of a sudden there's a little trust there. And next thing you know, they take a loan from there and they're getting heavy fees. They're having a high interest rate. And I see it all the time. And people just, oh, that's my bank. No, no, no. I trust them. I don't want to deal with anybody else. I don't want to show anyone else this and that and the other. There are laws out there to protect you. If I go around talking about someone's credit or sharing documentation, I could go to jail. I'm not I'm not risking my career for that. This is a heavily regulated industry, as it should be. As a matter of fact, the government makes sure that people are getting that lenders are taking applications from different walks of life, different demographics, different races, ethnicities. I kid you not. Lenders need to be able to show the government like we are actually serving various needs. Otherwise, and this has happened to some big banks, they've got fined a lot. So my point is that you just can't trust, an institution because they've done right by you with your checking account. A lot of times it's like a bait and switch. They got that little trust there. And next thing you know, they're offering you zero down. So you're thinking, man, this is fantastic. I can hold on to my money for this, that, or the other. People like that idea. But
It's that
some of
bait.
those institutions, 6% interest rate, right? High fees. We got zero down programs, but those rates are in the high threes, low fours. I mean, but someone just told me they closed at Navy Federal with a 6%. The realtor told me 6% rate that they got, and they didn't want to talk to anyone else. It's just you think this is your family. It's not. It's not. I'm here to tell people that. So you got to also watch out with these annuities. A lot of times, they'll people have 20, 30 grand being held by institution, and they're supposed to get interest off it. They'll get 1-2% interest off it. The bank's keeping 6-7%. I mean, killing people. So, investments, mortgages, you got to do your research and really figure out what you're getting into.
But how? I guess it's easy for us because this is what we do. We research, we find out for our customers. But for the regular Joe Blow out there that doesn't have the I guess the essentials of looking up certain things, how do they know what mindset should they have when asking, or what questions I should say should they ask when going up against the big banks and things in that sort when it comes, because they how banks are, they'll paint you the nice picture.
Oh yeah,
Won't tell you about everything. You got to read everything else. But
I do know.
but
And
what route do you, what how do you let people know, like, hey, no matter what you feel think, this is the top 5 question you should ask them. This is the mindset you should have when going in, even when talking to us. Point.
if you have gotten a warm referral, from a trusted real estate agent or someone that you completely trust, and they tell you this person's going to take good care of you, then we're not compensated by rate or terms, right? So whether I give you a 3 or a 3.5, it doesn't change my compensation. But I bet you're more likely to refer me if I get you that 3. So I would be stupid not to give you a good deal. I'm shooting myself in the foot, right? In that case, you might be all right. But if you don't have that trusted referral, you might want to talk to a few institutions and really you can't just look at the interest rate. You have to look at the costs and understand what are the lender fees and what are the other fees associated with it. I would also just check some reviews online. I understand not everyone out there is gonna do that, but speak to people, get recommendations, check reviews, and again, just local lending institutions, and they have them in every state. institutions that are familiar with that specific area, that have facilities in that area, are more likely to really have product expertise and product knowledge, and be able to do right by you. So that's another thing that I would want to say.
Hmm. Okay, okay. So real quick, because you had talked about the lender fees. Now
Mm.
we know it you got to pay people. It's got to be real about that, right?
Yeah,
What are, as far as who you represent? What are you guys fees? And what paint the picture of what exactly are you guys offering and charging for that service? Because a lot of people, they may want to, call you right after, and we get it out the way as far as what they,
sure.
suspect, as far as, okay, how much am I paying you guys for these services?
So the way that we do things is that, first of all the costs come at settlement. So that same day that you're getting the keys to the house, that's the first time that you're paying for everything. So, that's one of the things I like about our company. We don't even charge for the appraisal up front. Like, if you're working with me, you order the appraisal, and all of a sudden I disappear, I'm disrespectful, I'm not explaining your questions, you can go talk to another lender, because clearly I'm not the right person. Now, with that said, for conventional loans, which is like the majority of loans we do, whether it's 0 down, 20% down, or something in between, it's $575 for the appraisal. That's with a local experienced appraiser. And then the underwriting and processing is $1,395. And then the application fee, which is ordering transcripts, verifying employment, credit reports, and checking if the property is in a flood zone, is $95. So that total amount is $2,065. Now, as I was saying, because there's these programs and incentives out there, sometimes the credits that you can get from those programs can literally cover that, and in some cases, everything. So that is a cost, but whether you're getting a seller credit, grants, etc., it may not necessarily have to come out of your pocket.
Okay, okay. Oh, all right. Well, I think for now, ask all the questions that I can ask you, that I believe were very important to be able to get the gist of what you do, who you are, how you represent yourself, being in that position. Because a lot of people, they just, they scared to ask because they don't want to get bamboozled,
Oh yeah,
and they just don't want to seem as though like they look weak, or as far as like, oh yeah, you could play me,
yep,
because you wouldn't believe the type of stuff I hear why people don't ask questions, and I want to make sure that people, hey Fred, how you doing? He said, awesome, great info.
appreciate it.
And I want to make sure that people get the wholehearted truth of good people that I invite on, the show, to be able to get the truth about how you are supposed to look into things, how you're supposed to go into it. So, I thank you, brother. I appreciate you for joining us tonight. I try to keep it in the hour unless it get real good.
Yeah,
But I definitely appreciate you coming on and sharing your knowledge about your position and helping folks get the finance for their home, as first time home, or refinancing or investing or whatever. You definitely will have you back to talk more info as we get deeper into this podcast, brother.
fantastic. And I want to say that, you know, talk is cheap. You got to feel with your heart who's good and who's not. But, you know, it became a huge blessing later in my life. But, I left my parents' house at 18, not on very good terms. I've experienced complete homelessness. I'm talking about sleeping on a cardboard box in a park with snow on the ground, sleeping on the street. And the reason I say that is because I'm not perfect, but I don't forget about the hard times I've been through. And I hope to never forget. you know, I don't care if someone wants to buy a $70,000 property. I don't care if someone needs credit help. If someone wants to work with me, and they're dedicated to doing what they got to do, I'm all for it.
So,
There's
so
a there,
how do people reach out to you to get your information, or
I'm
how?
gonna yeah I'm my cell or email. I'm gonna put that right here. And I just want to say lastly that you would just be shocked. I know I mentioned some of the incentives. Montgomery County has a program. As long as you make $35,000, have a 640 credit score, There's moderately priced dwelling units. You could get a property over there. They have affordable dwelling units in DC. There are properties out there that are literally priced way below market. So that you'd be surprised. Obviously, if you want $1 million home, you probably have to make a couple of dollars, but there are all types of incentives and benefits. And I really believe that, a lot of people out there could get a home who would be shocked that they could. So, I'm all for exploring whatever we can to make things happen.
Well, we for one, I'm glad you made it through that rough patch in your life, because I feel like we all come from some rough patch. I always tell folks it's not always about, pretty much the destination, but that journey is what creates that destination to happen. And that is something that I feel as though it is very important that we always keep an eye on, say, hey, look, if we can get through this, we can get through anything, And I'm a man of great faith. My family, if people know my family, we are people of great faith, and we always try to stick with knowing that it's going to get better than what it is. So,
absolutely,
anybody out there that has a mindset and look, don't be afraid to step out and actually purchase your first home. It is not impossible. It is not a far-fetched idea. I speak with folks say, I don't make enough money. There are ways that you could be able to get the proper help. And you just got to ask, you got to open up your mouth. Closed mouth don't get fed.
Exactly. And if it takes a couple years working towards a goal, then that's no problem.
Yeah. And with the thing is, we'll work with you.
You got that right.
We'll work with you. We'll make sure that we are sticking by your side and making sure that we help you out along the way, because, hey, at the end of the day, we have to support you before we can even think about doing anything for ourselves. So that's just by law. But thank you again, brother,
for having me. I appreciate it.
I appreciate anybody have any more questions or concerns. I got his information up again. Please reach out for him. I'm gonna say it out loud. His number is 610. Yes, he's strange from another planet.
I'm living right here in DC.
But his number is 610-348-3772. That is his phone number. Now, hey, what other states are you licensed in? So just in case people want to invest or move somewhere else, they can still use you.
Besides, the tri-state area around here, Florida, Georgia, and Pennsylvania as well.
Any more coming? Because you got a whole list. Goodness gracious.
Within the company, Tennessee, the Carolinas, etc. But you know what? I might have to add a couple on there. I'm thinking about getting Delaware and possibly some others. So I'll have to keep you posted on that.
Well, you keep fighting, brother. This is your guy, Darian Cole, for the first podcast. Y'all clap your hands in there too, because I make sure y'all clap your hands up there. But this is the first podcast, such a success, and I'm so thankful to have my brother David to actually just be here and give us some great information. For those that's going to be joining us, remember, we come on every first and third Wednesday. All right, those that need to know something, make sure you like, you share, you subscribe. I got YouTube, I got Facebook, I got it all. I want to keep feeding this information. Now we have my brother here that was just great and helpful. Next time we're gonna have two other brothers of mine from different states, and I'm telling you, these are some phenomenal guys. Please check in, make sure you watch them and hear what they got to say. One of the guys, he is phenomenal on Instagram, and he just is funny, making his Instagram jokes about finance. So we really gonna have a great time. I'm so thankful for just being able to do this with you guys. And then don't forget, if you need a realtor, call me now. Can't forget about the business point of view. Call a brother. If you need some help, I call my brother David. We sit down, we work out a deal, try to help you get what you need. Boom, there you go. Any last words you want to give to the people, David?
Just appreciate everyone hearing me out, and please don't hesitate to reach out. I'm quite patient. And, I wish everyone a fantastic year. Stay away from this virus and stay healthy. And, may God bless us all. And thank you again for having me.
Awesome. Well, thank you again, brother. And this is us signing out. And check this out.